This is your Wall Street wake-up call. It's an important week for the markets with a Fed meeting, Bank of Japan meeting, and a slew of tech earnings. At the same time, the S&P 500 is at a record high. So here to help us make sense of today's markets is David Nelson, the chief strategist at Belpointe Asset Management. So David, what do you make of all these record highs, the most recent one being Friday? Are they justified?
Look, in a vacuum, with valuations where they are, and they haven't been this, typically they're not this high except outside of something like a tech bubble. In a vacuum, you can make the argument that warning signs, bells should be ringing. But in the real world, where interest rates play a factor, asset classes compete for capital right now. And stocks, compared to a lot of other asset classes out there, are just a better buy. If there's a bubble brewing out there, it has to be the bond market, because institutional investors seem willing to sock down a lot of capital investing in negative rates of return or zero rates of return in sovereign debt. So my money's in stocks.
Well, in the bond market, we'll get a lot more clarity this week. We have the Fed meeting on Wednesday. That's probably going to be a snooze, right? The first Fed meeting since Brexit. But then on Thursday, we have the Bank of Japan meeting, and there's a lot of pressure for the BOJ to add more stimulus.
Do you really think we're going to get more clarity out of the Federal Reserve? Every time they speak, I am more confused. No matter what they say this week at the meeting, you can bet there'll be a parade of Fed governors in the next 10 days that follow, all saying something probably just the opposite.
But if the BOJ adds more stimulus, that's likely to move yields in some way.
It will certainly do it. Look, they've been pushing the envelope on this, and they believe that negative rates of return will entice people into risk assets, and so far that's worked. But at some point in time, there's going to be a price to be paid.
As they say, time will tell.
Time will definitely tell.
So let's shift now and talk about tech earnings this week. Okay. We've got Apple, Facebook, Alphabet. What do you expect there? Those earnings tend to move the markets.
It's going to be hard for Apple not to beat the number. The estimates have been lowered constantly. Analysts continue to lower their target on the company. It's a show-me story right now. I mean, the iPhone has been incredibly successful. They're trying to morph into a services company. I'm sure over time they'll get that right, but it's interesting. I was just in a Verizon store last night picking up a Bluetooth, and I noticed it wasn't even highlighted. Apple was just like barely there, maybe in the corner. They were highlighting everything else. I have a feeling it has a lot to do with the financial dynamics for Verizon right now, but it's not necessarily the most known item anymore.
And I see you're wearing an Apple Watch.
I have an Apple Watch, and it has some features like the timers, which I like a lot. It's definitely not a must-own. I think it serves a purpose. You got to have a watch. Why not an Apple Watch?
Well, and there was a report last week that Apple Watch shipments were down over 50% in the second quarter. So, what's going to be the next big product for Apple? That's the big question.
I don't know. I don't think the Apple Watch is going to be the game changer for them. I'm not sure it's going to be a product. It'll probably be a service. I think they've been trying to build out the services industry, and if they can do that, then it will reprice because the multiple will go higher because the earnings will be more consistent.
All right. Well, David Nelson, we'll leave it there. Thank you so much for coming by.
Thanks for having me.
I'm Scott Gabb, and you're watching The Street.